Welcome to LaTour Retirement Talk. I'm your co-host, Tony Shore. And who am I here with today? There's just one today, one host and one co-host. Our host is, of course, Jim Margraf with LaTour Asset Management, LLC. And Jim, I'm excited about our show today. You've got a great topic lined up, one that we're going to have a great conversation about. However, we're missing Josh again this week. Where's Josh? Is he...
Well, Josh is on vacation this week. It's been a long time since they've been back to visit his wife's family.
Oh,
So
okay.
it's not the ski trip. Of course, it is summertime when we're recording this. So,
Yeah.
but it's been a while since they've been back to visit his wife's family.
Sure.
And of course, they have the newborn. So, of course, that is a requested visit from the in-laws,
Of course. Yeah.
So, that's a visit you got to make. And so they're doing that. And then, they're going to enjoy some time up there.
Sure. Well, that's great. Where is there?
It's Canada. So they're in Manitoba.
Oh, Manitoba. Beautiful. Wow.
Yes.
Nice time of year to go up and visit Canada too. That's nice.
Yes. That's just as it starts to get warm here, they're going back to where it's a little bit cooler.
Oh, it's fine up there. They'll be fine. Yeah.
Oh, yeah.
Yeah. It's getting into the good season there, hopefully.
Yes, it is.
Well, today's topic is going to be a great one. I'm excited about it. You wanted to call the show Comprehensive Retirement Planning Process. And I think it's going to be great. It's going to be a good refresher course for me, but especially for our listeners and viewers out there to know, what is the process? Why do I need this? And should I fear? I don't want to get a retirement plan in place or have to deal with it. But there's a process that will really help you and could help you avoid. It could save you a lot of money and help you avoid making costly mistakes, right?
Yes. And, the reason why I wanted to do this is because so many times we get the question, or somebody, when they come in, they're nervous about sitting down with a financial advisor. They don't know what to expect. What is the process going to look like? What am I expected to bring with me? What questions am I going to be asked? So I wanted to go over that because I wanted to put people's minds at ease. I also had someone come in, they say, well, when you're talking on the radio show, you're giving out the phone number and the website, here's how to get a hold of us. And of course, we need to let people know how to do that. But he was wondering if it was just going to be a sales. And he said, I was actually very pleasantly surprised that it was an informative, and he got, you guys got to know me. I got to know you a little bit. And we got to find out, hey, what really is going to work best? And I want to start off by saying, we're fiduciaries. So we're looking to do what is in the best interest of the client, not just sell you something. I'm not a salesperson, right? Now, if you need something, hey, we're going to actually, sell you something, a tool to use for your finances. But that's really the goal here, is to find out what is the best fit.
Yeah. And maybe you don't need something. If you do need, say, an insurance product to achieve your goals and it makes financial sense and it's what would protect you and your finances, great. If not, we'll look at more of the investing side, or we'll look at other things, or, we'll talk about the CDs you have or the investments you have or your 401k. It's not, you're not an insurance salesman, although if they need that, you have direct access to some of the bigger companies. And I think that's fantastic. As an independent, it really helps you look at all the possibilities and all the tools for them, right?
Yes, it does. And, you mentioned as you're going through there, sometimes, people have a certain amount that's in savings. And, I said, people sometimes get nervous when you ask them how much they have in savings. Because, we are doing a little bit of a financial inventory as we're getting to know someone. Where do you have different investments? Where do you have different groups of dollars? And, somebody asked me, well, I don't want to invest those dollars there. I keep them as my immediate cash cushion in the bank. I can get to it. I'm like, absolutely. You don't need to have all of your funds in the stock market. You don't need to have all your funds in any one tool, right?
Right.
You need to have a diversified mix. And yes, you do need some in the bank where you can get to it today or tomorrow. You need that cash cushion. If you are a very conservative investor and you really like CDs, well, I've had some ideas from working with people. There's some great ways to structure your CDs, to maybe ladder CDs over time. How best to do it for you for the situation that you're in.
And sometimes there's alternatives to CDs that pay even higher interest, but still protect your principal, have the same basic setup, but maybe it's a MYGA or an insurance product. So there are different options out there. But let's I think I may have got you off track. This is important what we're talking about, but go through the different aspects or the overview of what type of planning you do for people.
So when we talk about comprehensive retirement planning and the process, we're going to look at a number of different things, because when you're leaving one stage of your life and moving into that retirement stage, you're leaving your career, you're saying goodbye to that final paycheck, things change. So you've got your health insurance. So we're going to help with your health insurance. We have people on staff here that dive into Medicare day in, day out. And so you need to know how to navigate that governmental program, right? It's like any governmental program. It's complicated and you need some help with it. One of the next things we're going to look at is, for most people, as they're leaving the workplace, they're also going to need some help with Social Security. How do I plan when to start taking that benefit? What is the best time for me? There's so many combination of ways to file, especially when you're looking at a married couple. Maybe you have one that was a high earner and one that was a stay-at-home parent. And so you may have some widely varying benefit amounts, or maybe what if you both are very similar? So we need to, how do we plan? When do we take that Social Security benefit? So that Social Security planning is a big help. Our income planning. So you're going to say goodbye to that final paycheck. You've got Social Security income coming in, but you still need more income, because for most people, Social Security is not going to be enough.
Right.
So how do we plan for the income that's going to last as long as we do? Because Tony, if you plan for the short haul and you live a long life, you're going to feel the pain of that. But if you plan for the long haul and something happens and you pass early, well, you're going to be okay.
Yeah.
And, so we want to take care of that. One of the big things along the way, as part of the process, is the risk management. How much risk am I comfortable with? So many times we sit down with people and when we look at their portfolio, they're still allocated in a risk profile that was best for them 15, 20 years ago, and not at this stage of life as they're 62, 65, 67, somewhere in 70 years old. This next stage, how much risk are you comfortable with now as opposed to when you were 50 or when you were 40? It changes as we change stages of life and as we get older. I mean, even for me, I look at where I was 25 years ago as far as my risk profile. I was comfortable with the highest risk that you could get to in the market. Now, not quite so much. We need to pare it back a little bit, right?
Yeah.
So that's a big thing we need to look at. The other one is tax planning, because it's not how much you make that matters the most. It's how much you get to keep of what you make. So when we look at someone's retirement accounts, what they have, is the Roth a good option? Is it good to make that switch now, or is it not? I look at the Roth numbers, and I love the fact that Congress gave us a Roth. It's a great tool. Is it right for everybody? No. Is it right for some people? Most definitely. Is it good to have the conversation? I think it's absolutely good to have the conversation, run the numbers, look at it to see if it makes sense, to see should I make that transition over to from those IRAs to the Roth? Should I do that? So that's something we always look at as well. And then you have what we call enhanced planning. What happens to my assets when I pass? That's a big one. A lot of people get really concerned about that. I had a couple come in yesterday. They sat down and I said, how can I help? And they said, well, and the story that they went into is, I lost my parent, and my mom passed, and her house didn't have a beneficiary on it. They didn't have a trust. They didn't have the will set up. Her mom got sick and passed quickly, so they didn't have time to get it set up, and at the last minute there. And so they were like, it was a year and a half before we got to even have access to the funds from that. And so what do we do to get away from the probate process? Is the trust right for you? Is it not right for you? Do we just need some beneficiary forms on everything? So these are all questions that we're going to look at and different aspects that we need to pay attention to as we're making that change from one investment stage of life to the next. We go from that accumulation stage, that all those years that we're working, we're putting into those 401ks, those IRAs, to what we call the distribution and preservation stage of our life, where, hey, I've got this money, I've set it aside, but now I need to figure out how to distribute it back to me in a way that's best. That's going to last as long as I do, aligns with my objectives, my goals, and my risk profile as well.
Well, and you know what, Jim, that's true. And you cover all those areas, all very important, but they're all big parts of the overall retirement planning process. I know. And it's no surprise to me that you started with healthcare planning and Social Security planning, because you and tax you got in there too, but your two biggest costs, out of pocket expenses in retirement, will be taxes and healthcare, probably.
Yes, they will. They're huge.
And they could be very large, and so you want to address those. And that's why we've done separate shows. Healthcare planning, we've had your Medicare expert, you have Medicare Medicare specialists there in your office who specialize in Medicare, helping people understand it and looking at the different aspects that a lot of people don't stop to think about healthcare and retirement, especially if they retire early, right? I mean, that's a problem, isn't it?
Oh, it is, because if you're younger than age 65, well, you can't go on Medicare yet. So what do we do? COBRA is expensive. You have things like the alternative things like the medical needs sharing programs that are out there. But what they can do, someone that focuses their entire day, every day, on the healthcare side, what do we do? What's best? They're going to ask enough questions to help figure out, where do we go from here? And, the thing that I find when people especially get close to age 65, I hear it all the time. The closer I get, the more my mailbox gets inundated with flyers and brochures from different companies on Medicare. And the more I get, the more confusing it gets. What do I do? And so come in, sit down with someone who has been through training year after year after year to stay up on all of the Medicare plans and all the different options that you have, and then can ask the right questions to get you where you need to be. But then when we sit down on the financial side, we're going to talk about your Social Security, right? We found the reason why we did that is because we found so many people were filing at the time that was wrong for them, and it was based on some misinformation or just some missing information, and they didn't have all of it. So that's what we endeavor to do, is to fill in the holes, run some reports. We run a Social Security maximization report and see what's the best time or combination of ways for especially a husband and wife to file for that benefit. And it's a huge help because it's the foundation of our income in retirement. And if we lay the foundation properly, everything else is just that much better.
Yeah. Yeah, I think that foundation is so important, and so healthcare is crucial. They say a couple during retirement, the average couple will end up spending close to $300,000 out of pocket on healthcare expenses. It's
I don't
crazy.
doubt it. My wife and I are currently helping my father-in-law right now, and I see the medical bills for him. He lives with us, and it's astronomical. I mean, it's nonstop at this point for him. He's in his 80s, and it's a lot. So getting some help with this, I mean, it gives you peace of mind when you have someone who dives into this on an everyday basis. It really helps out.
Yeah, it really does. And so, and I know, we don't have to go into depth because we've done whole shows on this
Right.
topic a lot, but Social Security is the foundation of retirement income planning when you talk about the income side of retirement planning,
Right.
because it's a known quantity. You can figure out how
Hmm.
much you're going to have. And
Right.
it's something that you do need to plan for. People say, well, I just file when I retire and that's it,
Yeah.
or at
Yep.
my full retirement age. But there are so many different times at which to file, and finding your sweet spot. You can maximize spousal benefits, you can maximize your own benefit,
You sure
and
can.
you need to figure out, am I going to have to file early at 62 for certain reasons? Some people
Hmm.
need to. For other people, it's a big mistake and a costly one. It could be over
Hmm.
$100,000 difference if they wait to file. So
Right.
that's important, isn't it? Social Security.
It's so very important. And that so many people, they file on misinformation, like
Yeah.
the one we get all the time is Social Security going broke. There's all of this stuff in the news. And I tell people, you look at the news, well, that's great. What I do is I look at the OASDI trust report. That's a little more calming than looking at the news. And you think about what comes out on the news, it's all designed to get you to watch that channel a little bit longer and stay there and listen to it again. But when you stop and you take some of the sensationalism out of the news and the hype and just look at the math and the numbers, it's not near as dim of a picture as what the typically comes across in the news. But again, you need to do what's best for you, because I really believe that Social Security is going to be there. Now, for someone like myself, I'm in my early 50s. By the time I get to Social Security age, it might look a little bit different. Uh, but for those that are in retirement, I don't expect much to change at all, because every time they've done a new rule for Social Security, everybody that's already there has been grandfathered in.
Yeah, there you go. And so, yeah, and I think obviously, as long as people are working in this country, there will be Social Security. It just might be
Sure.
reduced.
Right.
Hopefully, they don't keep kicking that can down the road. I think they will eventually do things to extend the life of the trust fund, the Social
Right.
Security fund, the backup fund. I think they'll shore that up. Now, it might mean an older, when the full retirement age might bump up to 70 at some point.
Right.
But the majority of people right now who would need to start retirement planning don't have to worry about that. I would say, because they're already
No.
set.
Right.
So worrying about that at this point, if you're 50 or older, Social Security is going to be here for you. So
Mhm.
you need a plan in place, but you need to maximize it. And I know you have that report you can run.
Yes.
But this is all part leading into income planning, which you listed separately. Income, solving for income in retirement. That seems to be one of the biggest sticklers that people the DIYers, that's
Right.
where there's usually an epic fail, and you don't want to run out of money in retirement, right?
No, it's never a good idea to run out of money, no matter what stage of life you're in. I don't want to run out of money now, but especially at the point in retirement where I'm not wanting to go back to work. Right. That's if I run out, then that's really a bad situation. So there's some things I need to think about as I'm planning for sitting down with a financial advisor, such as ourselves here. What are some of the things? Well, you might want to know, what does it take to maintain your budget on a monthly basis, right? You might want to we want to line out, what income streams do we have, what Social Security, pensions, do I have rental income? What are those different income streams that I have that I can depend on in retirement years? And then if there's a difference, let's say the income streams that I have bring me up to here, but I really need to be over here for my income. How do I fill that income gap? And, when you're looking at how I fill that income gap, I want to do it with some assets that are structured to be very safe. Okay. I don't want to take the market risk on those funds that I'm depending on for my standard of living. However, once I've solved that, because not everything that I have in my investment portfolio needs to be safe, needs to be safe from any type of a market downturn and not take the risk of the market on it, because I really do need some funds over here that are going to grow and provide me with some long-term growth and capital appreciation along the way to help add some cushion and some cream to my standard of living that I have. Yeah. So solving for that income is a big one, but I don't want to put all of my funds there. I want to put enough and do it in the most efficient manner possible to get that standard of living that I have met. Once I've done that, I'm gonna take the rest of the funds, and now let's look at your risk tolerance. How much risk do I really want to take on my portfolio? And we're going to match the investments we pick to someone's risk tolerance and the goals that they have for their life, and recommend investments based on that.
Yeah. Well, and that's huge. Planning for income. We're so used to the accumulation phase during our working years where we just take our income and put it into savings. But now it's a complete 180 reversal. You have to take your savings and somehow create an income that will last. And do I have enough? Those are all questions. That's what you do. You help people answer that and plan for that and put together a written plan so people don't have to worry whether there's market volatility or, hey, we want to spend this much this year because we're going to travel a lot. You can plan for those things. And
you sure can.
Speaking of planning for those things, risk tolerance. You mentioned risk management. What's that about? I mean, how does LaTour Advisory help people with risk management?
So what we're going to do, Tony, is we're going to start by asking some questions. We're going to go through a questionnaire. It's a non-threatening questionnaire. I tell people it's not a test. There's no such thing as a wrong answer, but it's going to get some facts and also how you feel about different situations that in the market. How do I feel if my portfolio was to have a drop of 20% in it? So I get every response from, hey, I'll invest more, to I couldn't handle that. Yeah. To so you get all extremes, and most people fall somewhere in the middle. But so based on that, at the end of that risk questionnaire, it's going to give me a number on a sliding scale between 1 and 100. And so based on that number, then that's very individual to you. We're going to start to allocate funds. How much do we need to have where it's safe? How much do we need to have over here in a growth position? We're going to look at those different positions using that risk score, and also looking at the objectives that you have. If you have a short-term outlook for a group of dollars, well, you're not going to go and put it in some longer-term investment. You're going to need to keep it liquid, put it somewhere where it's not going to have the market risk where, hey, if the market drops, 2 months from now, well, I'm going to have less money in this portfolio. I want to invest it according to those objectives and those goals that I have, because I don't want my funds to do the wrong job. I've got to invest it for the job that I need those funds to do. So when we're looking at that risk tolerance, here at LaTour, we color code our investments according to risk. So for our clients, when we give them that report, we have the funds that we color code green. That's that safer money that we have. Then we have those funds that are yellow that has professional management on it. It's in market positions according to your risk tolerance. And, that really helps balance things out, because when the market drops, if I'm in too risky of a position, that's going to feel a lot more painful than if my investments, the risk tolerance on my investments matches my risk profile. Now, when the market drops, it doesn't feel near so bad, and I'm able to weather that storm. So, I guess you could say you have more of an all-weather portfolio. We've had all this, the tariffs in the news, markets up, markets down, and people get really nervous. But if I have a portfolio that is structured according to my risk tolerance, I can weather those storms. I can weather the tariff storm or the storm that's out there that we haven't heard about yet. So it all helps. But the big thing is I need to be invested for me in my particular situation. And here at LaTour Asset Management, what we're doing is we endeavor to match everything to the client, their goals, their objectives, their risk tolerance.
Well, yeah, and everybody's situation is different. I like how you really customize it and get to know people and their goals, their time horizon, their maybe health situation, their travel plans, retirement plans, how much they have saved. There's so many variables that I think so many people think, oh yeah, I'll just do what my mom and dad did or what my neighbor next door said. I filed for Social Security at this time. I did this. And it's different for everybody. And you can make really costly mistakes doing that. I would not want to make any of these moves or deal with any of this without somebody who goes through this every day. The specialists in these fields, and that's what you have. You have a team assembled there at LaTour, and I think that's fantastic. So, we touched on it before. You mentioned Roth, but tax planning for retirement is a big one. I used to think before I started working with the finance world and with you guys there at LaTour, I always thought, I don't need to worry about taxes in retirement. I won't be earning any income. How could I don't even have to worry about taxes. But that's a big misconception, isn't it?
It is a huge misconception. I actually sat down with someone the other day and they thought that just because they turned a specific age that their tax bracket was going to drop. I was like, that doesn't happen. The government wants your money no matter what.
That's the way it should be. Yeah. Everyone over 60, when you hit 65, shouldn't you drop down into like a 5% tax bracket? Wouldn't that be great? Wouldn't that be great? The government funding, the deficit wouldn't like that, but I would.
Sure.
Hey, we're actually out of time. I didn't realize we'd already filled our time today, Jim. But before we go, how can somebody get a plan in place and make sure they have all of these areas covered?
Oh, Tony, just give us a call. Our phone number is 417-614-5996. Also invite you to go visit our website, LaTourAsset.com. When we sit down with someone, we are always looking to do what is in their best interest. When we present ideas, it's for your consideration. There's no pressure to do anything with us here at LaTour. But if you want to give us a call, our phone number is 417-614-5996.
All right. Well, Jim, great topic today. The importance of financial and retirement planning. A good one. Listeners and viewers, thanks for tuning in. That does it for today's episode of LaTour Retirement Talk with our host, the one and only Jim Margraf.